Before the world wakes, before the noise begins, there is a moment of pure clarity. It is the ritual of preparation that separates the professional from the amateur. The calm before the decisive strike. Every movement is deliberate. Every action is calculated. There is no room for haste in the pursuit of legacy.
Paragraph 11.
He settles into the space, claiming it. The silence is not empty. It is full of potential. The focus now narrows. The global markets are a living, breathing entity, and he is listening to its heartbeat. Institutional wealth is built on the ability to see what others overlook, to find the signal within the noise. True authority doesn't need to shout. It manifests in the steady hand and the unwavering gaze. It's in the notes taken by hand, the physical connection to the strategy, where the complex becomes tangible. We are not just looking at numbers, we are looking at the architecture of the future. When the analysis is complete, the perspective must shift. One must step back to see the grand design. The transition from observation to execution is the moment of greatest risk and greatest reward. Here, the variables are weighed, the probabilities are measured, the conviction is solidified. Confidence is not the absence of doubt, it is the mastery of it through absolute preparation. He stands back, his presence filling the room, the master of his domain, ready for the opening bell. The time for speculation has passed. The time for the Diego Rifamo show is now. This is high-stakes finance. This is the new standard of institutional insight. Prepare yourself. The show is starting soon. In the depth of the market's quietest hours, opportunity isn't found by the loudest voices. It is earned by the most disciplined. Welcome to the inner sanctum of institutional wealth, where precision is the only currency that truly matters. Success in this arena requires more than just capital. It requires a temperament forged in the fires of volatility. Before the world wakes, before the noise begins, there is a moment of pure clarity. It is the ritual of preparation that separates the professional from the amateur. The calm before the decisive strike. Every movement is deliberate. Every action is calculated. There is no room for haste in the pursuit of legacy. He settles into the space, claiming it. The silence is not empty. It is full of potential. The focus now narrows. The global markets are a living, breathing entity, and he is listening to its heartbeat. Institutional wealth is built on the ability to see what others overlook, to find the signal within the noise. True authority doesn't need to shout. It manifests in the steady hand and the unwavering gaze. It's in the notes taken by hand, the physical connection to the strategy, where the complex becomes tangible. We are not just looking at numbers, we are looking at the architecture of the future. When the analysis is complete, the perspective must shift. One must step back to see the grand design. The transition from observation to execution is the moment of greatest risk and greatest reward. Here, the variables are weighed, the probabilities are measured, the conviction is solidified. Confidence is not the absence of doubt, it is the mastery of it through absolute preparation. He stands back, his presence filling the room, the master of his domain, ready for the opening bell. The time for speculation has passed. The time for the Diego Rifamo show is now. This is
Good evening, ladies and gentlemen. Welcome to the Agorfumo show. We are back. I know I've been away for a while. But we are back. I look slightly different. I look nice. Or I look weird. My wife says I look like a baby. Welcome, ladies and gentlemen. It's been a while without being here. So We are starting with looking for a trade here. We are starting with looking for a trade here. When I use a stop, am I using the right account? Okay, now I have to enter. Oh God. Okay. Sorry. I'm gonna try use a buy stop here. I know we are starting on a wrong place. We are starting to look for a trade as it breaks out again. We're gonna wait and see. But welcome, guys. Yeah, started late, so that is why we start with want to jump in on a trade without discussing a lot of things that happened in the market. I hope you've been good. Do not forget to like and subscribe. Yeah, not myself, I should say. It's been hectic couple of days. But let's see what we have. I hope I'm audible. I didn't check that I'm audible. Let me check. By big institutional investors. What the hell? SpaceX IPO happening right now. To get enough cash to buy into this highly anticipated. Something weird is happening. To trade holdings, and that includes. There's something else playing elsewhere. So I just need to see that I'm audible. Okay, I'm in a trade. Just gonna check if I'm audible, then we can do the rest. Oh, Christ. Ladies and gentlemen, I check if I'm audible. Welcome to episode 5 of the Agora for More Trading. Something is happening, guys. I want you to guys hear the right thing, but this thing is giving me nonsense. I'm on a trade though.
Gross, 9% return. Guys, I wouldn't even like. I won't.
Ah, flip, man. Sorry. Oh, I'm not feeling well. I don't know what's happening with my life. I hope guys are good. Are we good? I hope guys are good. Okay, it looks like we are good. We are still on a trade. Okay. The good thing we see S&P 500 is broken below that. It has held that 1 minute support that we've been looking to hold, which is a good thing. Our next target basically will be this previous daily low. So if you went on taking S&P 500, you will be looking for 1:2, something like that. But I went for the body. Don't ask me why, which is the weaker one in this case. And it will be aggressive as it moves back up to the upside. So yeah, but let's look at this trade and see how it plays out. I love the fact that it has already broken below this previous support here. Just gonna mark that support. Just broken below the previous support. Um, Perhaps a move like that will be happening. I am on a trade. I'm quickly gonna go to class while trading with you guys. I'm not feeling well. So it looks like it's reversing. Could be retesting that and reject from there. Yes, I took Nasdaq, but as this comes back to previous daily high, I think Nasdaq will break out from this previous support, yeah. And if S&P 500, I mean Nasdaq trades below that, that will be a good thing for our trade. So yeah, but I'm in class. I'll update as we go along. Okay. We have been taken out back all the way up. No, sorry. I'm just thinking out loud. I've been taken out of this trade. I think we have to wait and see what happens as it comes back up here. Or break below here. I'm gonna wait for that break, and if that break happens, we're gonna look for a trade again. Tap the hello? Uyaphila njani? Yebo bhuti wami. Uyi-secretary LFA. Yebo bhuti wami. Sure. Yo, for now I'm extremely busy. Yeah, nginesipani nayo yonke le nto ngiyasebenza full, so it's gonna be tricky for me. No, ngiyabonga bhuti wami. No problem. I don't mind, don't worry. Thank you. tried another trade. Let's see if this trade will play out.
So I really want guys to be careful. Just because things are not stable on you guys now, doesn't mean that you fully rely on my tool, feels gives back to you. You still have to do your own due diligence, check on, whatever has been given back to you. Because again now, because imagine if someone were to put a
This one
lot
flips. I'm gonna take the trade.
with where we're wrong.
I'm also in class, so sometimes I forget to switch off the mic. So pardon me on that, but I'm on this trade again.
Over the US, the US stock exchange, Chicago International, whatever, exchange for really the company, but 5 companies. I wanted us to do at least 5 companies. That's with the and so those companies are ones whereby we'll also be taking trades on them. So we building reports first, and then we then take those 5 companies. Yes. Yes. Yeah. Yes. Yes. And then the calculation. Yeah. Yeah. Yes. The calculator, guys, what I've, yes, yes, yes. Yes. What I've seen now, also what I'm still working on is I'm adding other valuation methodologies, right? There's DCF, meaning counter cash flow, but there's some industries, some companies that cannot be, I don't know, they're not fit with DCF. All right. So some companies, for companies, for us to really value them, we have to use other methodology, right? So there's also what we call free cash flow, CCF, and just other valuation methodology. So I'm still, because now what I did for you guys, I'm still compiling this Excel workbook that I'm going to be sending you. I'm going to send you today. The thing is now, I only factored in only one valuation methodology. It was only DCF. But when I checked some, of these.
Most stop loss to break even. As I said, I'm in class. I forget to move this. So break to break even. See if it will come back, take out that low. If it does, then, and there's a reason why the market is moving lower. I'll show you now. There is news coming out from Iran. Quickly log in here so that I can show you the news. I hope you guys are good. Yeah. So here, so US CENTCOM, the US military is carrying out fresh strike on Iran. It's a bit bearish for, this is a bit bearish for US. I mean for US stocks, as the fresh strike means oil prices might go up. So basically there will be a shortage of oil. And as we see, USD crude oil gas futures settling at 78.95 barrel. So yeah. Okay, let's jump on interesting, beautiful stuff. Let's do it. Where do we start? Okay. Huh. So, ladies and gentlemen, just quick updates and what's happening. Let me record. Do this. So, now quickly do settings for recording. That's fine. I'm just doing settings. So, let's start. A lot has been happening. We have 15 minutes. So let's start quick update, and I'll be recording this for Facebook. I'll put it the way they are. So a lot has been happening. We have the latest CPI, which came out cool. I'm not certain about PPI. I need to verify that. But overall, we seem to be starting to price in for a weaker dollar. Um, for which it's not an overall change of the dynamics. Okay, so for the uh previous how many days here? Let me see. So basically, there's a second week holding a gold trade, still looking for shorts. However, that proper biasness for gold shorts has really evaded me, but I'm still holding it and have de-risked to break even. So I'm just holding this trade. So what I'm looking for gold, it's a possible break below the current support, which will be a possible break below $3,953 per 950 3,953. Looking for lower prices. Will gold be coming back close to 3.5? I need to mark 3.5 as a possible gold reactionary point there. Will gold be coming for that? I don't know. Only so that's another thing that I'm looking for. Yeah, that's fine. I'll put it here. But will gold be coming back for 3,500 dollars per ounce? I'm not sure. However, we're looking at gold currently trading at 3,175. So if we break this decisive, more like a decisive support here, and trade below it, the next level that you could be looking to for gold to come react, it's that current this next support there. However, when you look at the psychological level, I am going to be looking at 3,500 as another reactionary point that is possible, or overall comeback, which others are saying could be impossible. come back to this 3,445. That's another possibility. However, given how the macros and the fundamentals are looking, I doubt we could look to start to see a gold reversal in this regard, because when you look at the market, yes, we are holding that support. Break below, you'll think the next level will be the support here. However, the macros have entirely changed. The macros have totally changed. But let's speak about something that we see. Can discuss that later. So the macro exchange of CPI inflation. So these are the top setup. And if we were to look at the top setup page, we have GU, which is a +9. We have AUD USD, which is a +8. And then Euro USD starting to be bullish again. And on the bearish side, I'll tell you something that has happened here. We have USD CAD, which is bearish, and Nikkei, it's bearish already. Not yet bearish, because, yeah, it's bearish in a way. And I have really, on one of my portfolios, I've longed Nikkei. But anyway, let's look at the asset scorecard for GU. We're going to start with Forex. So let's look at the asset scorecard for GU and AUD USD. Why is it bullish? And if you look at those scorecard, we don't have any commodities. We look flat on commodities because they are still giving a neutral reading. So we're going to start with GU. When you look at GU, we never look at technicals. We have seen that they have flipped. I'll show you the technicals though, but they have flipped positive. What's interesting here is PMI, retail sales, bullish. They're giving a strong bullishness for GU, and the rest are just flat. Also, looking at AUD USD, same thing, but institutional positioning for Australian dollar against the US dollar seems to be still be bearish on it, which is interesting, I should say. However, just to rate this to the British pound and Australian dollar, I just want to rate that. Let me look at economic heat map for USA. Let's speak about the economic heat map for USA and show you exactly what changed currently and why are we starting to see a quite bearish US dollar currency. And one of the most important ones, which at least kept everything sane, was, so let's start with CPI. CPI, the forecast was 3.8%. The forecast 3.8% came out at 3.5%, which is a 0.3% miss. And one thing to remember is for inflation, it was an overall cooling. Core CPI, year-over-year CPI, month-over-month CPI data, including hourly earnings, if I'm not mistaken, it's a total different ball game in this regard. It has totally been a cool inflation data. When you look at CPI, also when you look at PPI as well, forecast of 6.2 came out at 5.5, a whipping cool of a miss of 0.7%. That's quite bearish for the currency. And look, this will start to tell big companies and analysts to say, look, perhaps inflation is starting to come down now. Maybe the Feds might not even hike rates for the year. Maybe the Feds might start to consider in the next quarter or first quarter of next year to start cutting rates, given that inflation is coming down. Yes, inflation of 3.5 is still quite high. It's not where it's supposed to be in inflation in this regard. So that you will expect the Fed to start holding rates or just holding the rates where they are, not to become very hawkish or dovish. So keep the interest rate the same. That's what we're seeing in this regard when we look at inflation. Also PMI, we've seen PMI just getting a bit of a miss there, and then that's why it is bearish. However, data that still to be seems quite strong. You look at unemployment US initial jobless claims, the weekly jobless claims, a forecast was 217, and we gotten a lower one, which is, look, the market can like it. To be honest, the market can like that there's still jobs, the labor market still solid, and inflation is coming down. That seems quite positive, for the fact that you look at the labor market is still solid and still resilient, and inflation could be coming down. Then we could see a reaction into moving into risk asset, where we'll start to see maybe your your dollar coming lower and your stock starting to boom. But we know that there's Trump, anything is possible. But anyway, we said we are gonna compare it with the UK because we're looking into trading UK GU and also Australian dollar, and see why we're still gonna remain bullish for that. On the other side, not recent data, the last data we get was June. However, when you look at all the data we've gotten, we still remain 60% bullish, and the dollar was 40% bullish. And let's move into the Australian currency. What are we seeing there? That would be interesting for me to see what's going to happen. And still, we look flat. It looks seems to be comparable. Um, very 40% as well. But inflation there is still 4%, which we are waiting for the recent inflation data from Australia, which I am very interested in it. If it comes back hot, which is above the forecasted number, then I'll be more interested in it. But anyway, while we're discussing the inflation data, we can just quickly look at the economic data. Remember, this thing have lately changed. Labor market, inflation data, look at CPI overall, year over year CPI data. Here, you can clearly see that from March, from the end of the first quarter coming into the second quarter, we've seen this uptrend in inflation data, um, where we basically, as the war started and oil prices started skyrocketing, we've seen this uptrend. We've been coming from 2025, from May, we had an uptrend, flat, and came back close to 2.4%. The Fed started cutting rates. However, we also saw that really aggressive moves in inflation data, and that will be coming in from high oil prices, which has literally increased everything, which is 4.2. So this current um, lower move in inflation, it's not really, it's so much appreciated by the market. Not just only that it is lower than the previous one, but also it's cooler than the expected what do you call target that we have seen for the year so far. So that's good. Where the forecast was 3.8 and we got a 3.5, the market did love this, and the currency itself, we see the US dollar coming lower, starting to be bearish when you look at that. So, which I like, and I think for me, I do really love that. But anyway, unemployment claims. So I'm just looking at the overall fundamental analysis of everything and why maybe a dollar bear will be necessary. In this case, when you look at unemployment claims, still solid. Our focus was 216, and then we've gotten a lower number, which is a very good number. Still says labor market is still solid and intact, and inflation is coming down. Good news for stocks. The currency itself will start to be bearish. But with this overall thing that I've been yipping about, we go to the top setup, where it scores this. Basically, the hedge fund, what it does, it takes the overall fundamentals and score them. So we're just going to look at the scorecard and why I am bearish. But anyway, we already know that on the scorecard, we had GU uh, that will be bearish. That will be bullish. So I am going to look for a trade as it retests that. One will say, why don't you move your stop loss very close to the low? I just feel like that moving my stop loss very tight, it's not going to be assisting. My overall target so far will be at the support, and you're looking at the price of 1.38478. Anyway, let's speak about the top setup before I fumble this. So GU, it's a +9, and we've discussed that. AUDUSD, it's a +8, and the DUSD, it seems like the dollar bears are quite um, the dollar is starting to be bearish given the inflation data. And I think if we start to have NFP that is extremely bad, then that will confirm everything. So here we have GU that have set up my limits to go long as we retest the support. And you already know for the previous few months, we've been on this downtrend, and automatically we held that support, and we broke above this current one, and we look to be holding that support and this current break of this trend line, and we held it. So I am looking to go long on GU on this what do you call this, on this support, given what we have explained. Lower inflation are giving us a good idea that we might be bullish for any other currency. This is an interesting one for me. This is an interesting one for me. Look, didn't even do a full analysis on this guy here, but here's my take. We firstly held that support, and we seem to be rejecting, which it's a good thing, to be fair. However, didn't even do an analysis on this thing, man. I will be looking to go long on Australian dollar against the against the US dollar on the retest of that support there. Looking to go long there. If we just look just to do that, just not to miss the trade. And this could be an entirely change of everything, to be honest. This could literally change anything. We could see Australian dollar coming back all the way down to all the way up to this year highs that was created in May. That's a high possibilities, and that can be an aggressive move, because if we to look at an overall trend, we're still on an uptrend, held that support very nicely, and we seem to be changing the shape. And if we're changing the shape with inflation coming down, and that could also flip gold to be bullish as well. And once we see gold being bullish, though it's not going to be good for my gold trade, I have not even secured profit. I've still kept it on break even. But once we see gold moving to that might benefit also the Australian, what do you call this? The Australian dollar as well. So just something to note as well. So I will be looking, if it retraces all the way back to that support, I am gonna attempt to go long on Australian dollar. Something just for everyone to note. So that's the currency pairs, and that's what I'm looking for on the currency side of things. And I think the British pound still remains strong. We see also GJ, that is still a bit bullish, but for me, I was looking for it to retest all the way back, and it didn't do that. So you could look for opportunities as it comes back there, but I just don't like it. For me, a premium place would be it coming back to that support. And if it goes back to that support, I am gonna be comfortable to go even aggressive on it, on GU. So those are the trades that are of value to me and I'm interested in. And I think another trade that maybe we could, as the fundamentals are coming through, and it's a bit lagging, it's my friend here, GU, EU. EU, one thing about EU, which I should say, it has not broken this trend line. It's still holding the trend line. So let's just go through it. It's still holding that trend line. I can still use this as uh, resistant or support, doesn't matter. Let me see. Okay, this is resistant area. I don't know why I changed, but anyway, we're still holding to that support. Once we see, this is me. Once I see it breaking above this current resistant or trend line kind of a thing and hold come back to that support, this will be a definite trade. And it's lagging because you see GU it has already moved, and EU is still a bit lagging. I know one will say, why don't you look at for a trade in the 4 hour time frame? But when you look at this 4 hour time frame, it's not as clean. It's just consolidating back and forth. So I just want an aggressive and decisive move um, above the trend line, and just retested that and trade above it, and maybe something could be happening on GU. Is it GU? Am I saying the right thing? On EU. That's something that I'm looking for. And also, we know that we're flip bearish when we look at the 200 MA. So it would be nice once we flip that, it could be giving us coming back to retest the 200 MA and possible break above the 200 MA. So that's what I'm interested in, for the currencies side of things. So I think I'm not gonna go back and forth. We just literally discuss the currency market right now and the opportunities that are coming with the currency market. Interestingly, KJPY, it's a very strong, it's giving a +5 on H fund. Just quickly do that. It's fine. Let me just quickly see what's happening here. Interesting. I'm not a fan of KJPY, but look at that. And is already flipped entirely to be bullish. If maybe it come back to this lows here, maybe by then I'll look at it and decide if I'm interested in it. India 5 means say gold. I've already spoke about gold. Please do not forget to like and subscribe. Please like the live. I'll look at gold now. Sorry, I'm also live. I'm recording this for YouTube, but I was also live. That's it. But anyway, let's discuss gold and look at the fundamentals of gold, and I can call it a day. So top setup for asset scorecard. Let's look at the asset scorecard and why I'm saying yes, I am short gold. But I am I'm short gold, but I have de-risked. I'm just sitting here. Look at the asset scorecard. Gold is giving a neutral reading. You look at technicals. Yes, technicals are bullish, but economic growth parameters are showing a bearish. Whether you look at the GDP quarterly growth is good, but the rest, your manufacturing PMI, service PMI, it's an indication of inflation coming lower. That's bearish. Inflation data is bullish for gold. Remember, overall, we've been bearish for gold for the past few weeks, and it's just now that we're starting to be bullish for gold. And the reason why we're starting to be neutral to bullish for gold, it's inflation. Remember, overall, when gold when inflation was quite high, when we're looking at a 3.8, 6.8 PMI, we've been bearish for gold because assumption was Feds won't cut rates, and possible Feds will hike rates, and when Feds hike rates, gold do not like that. Then that very basically added with the economic growth parameters, including the inflation data, gold started to be bearish. But now we have lost all that in when it comes to gold in terms of inflation. We're starting to be bearish for the dollar, and by that time we're bullish for the dollar. And the labor market has been bullish all along, resilient labor market. Even the recent weekly data also, it's been data that shows a bit of bullishness. So we have lost a lot of bearishness on gold here. Hence I've de-risked. I am on break even. So for me, let's just to close it off and look at the technicals of gold. And I'm going to look at technicals of gold in conjunction um, with with the dollar. Look at the dollar. We held that trend line kind of a stuff. We've just broken below the trend line. Could this be the start of a bearish dollar, where we hold that current support and we look to be coming back to retest this, to be retesting around 100 or 99.799 possible. So as the dollar still continues lower, or that could be for me to say gold will be starting to, if the dollar comes back lower, gold will be bullish in conjunction with the fund. But the fundamentals for now are still neutral. So I'm just sitting with no decisive move. But for me, currently I am holding gold. Here's my trade for gold, de-risked to break even. But there's a trade I have on gold. So of de-risk and just sitting. And already on the news side today, I think what there were fresh strikes on Iran that could push gold lower. With the market assumption, is if there's new fresh strikes on Iran, all prices might go high, and that will be inflationary. And if it's inflationary, then we're looking at gold. We're looking at gold coming back, gold coming lower for that. But anyway, also if they strike, if we start to see all coming back up to retest this current support, definitely gold will start to break from the previous support. So this was what I just wanted to discuss, looking at the fundamentals and everything else on it. So other than that, thank you so much for joining me. I appreciate it. Do not forget to like and subscribe to this video. We'll be doing more content with you guys. But before I go, I just have not started doing stocks a lot on this account, but I am interested in stocks. So we'll start discussing stocks. Other than that, thank you so much, guys. Do not forget to like and subscribe, and look out for our podcast that will be coming in every single week. Twice a week, we'll be having a podcast with a member of CTA Research, Kevin. So look out for that. And already we have about few episodes that we've already done with Kevin. Look out for that. Go to our YouTube, look for those ones, and will come in handy. But that will be purely for stocks market. We discuss a lot of stock market, not so much of the currency market. But other than that, thank you so much. I appreciate all of you. Do not forget to like and subscribe. Thank you so much. Have a great day. And this is Le Ahor for More Trading Show.